This is brief exercise 3-10 where we're going to prepare adjusting and transaction entries for accruals. So again, at the end of each period we need to adjust all of our accruals. So we need to recognize any liabilities or things we owe that we may not yet have recorded. And so in this case we're going to look at salaries. So when we're looking at salaries that we pay, we need to pay attention to dates. So this one says Vintage Clothing Co. is open for business 6 days a week. Weekly salaries total $7,080 and they are paid every Monday morning to employees for the salaries earned during the previous 6-day work week, Monday through Saturday. The company has a July 31st fiscal year end, which falls on a Thursday this year. Salaries were last paid on Monday, July 28th for July 21st to 26th. The next payday is Monday, August 4th for July 28th to August 2nd. Prepare the journal entries. So first, they just want us to record the payment of salaries on July 28th. So that would be our normal transaction. We would prepare our salaries for the week on the Monday following. So in this case, we prepare salaries expense. Right, it's a cost. We need to have employees to run our business. So we debit salaries expense for the full $7,080 and we credit cash. We've written them checks or direct deposited their salaries. Okay, so again, every week we would record this journal entry to record the previous week's salaries. But when we get to year end, we have a little bit of a glitch. Year end falls on a Thursday, but we don't pay our salaries until the Monday. We don't give them an extra paycheck on the month end. So we don't pay them every Monday plus the last day of the month. We would pay them the next Monday that would fall in the new fiscal year. So what we have to do is accrue or recognize that those employees worked Monday, Tuesday, Wednesday, and Thursday for us in 2017, in fiscal 2017, and then they would work Friday and Saturday in the new year. So we need to accrue for those days. Okay, so we need to accrue for July 28th, the payment date. They worked Monday, 29th, 30th, and 31st. Okay, that's 4 days. They get paid for 6 days. So each day, salaries, if we go 780 divided by 6 days, each day salaries total at 1,180. So we're going to recognize 4 days worth on July 31st. So on July 31st, we're going to debit salaries expense showing the people, our employees, worked those 4 days in 2017. So we're going to take 1,180 times 4 days. So they worked for us and we owe them 4,720 for the 4 days they work. But we don't write them a check, so it's not credit cash. We're not going to pay them till next Monday. We're just showing that we're accruing for it. So we're going to credit salaries payable. We owe them this money, so it's a liability. Alright, so the nice thing about adjusting entries is they're going to hit the balance sheet and the income statement. So the salaries expense is our income statement account and salaries payable is our liability. We owe them that money on the balance sheet. Okay, so that's recognizing the 4 days that they worked in the fiscal year end that ended on July 31st, and then the other days will be in the fiscal new year. So on August 4th, I'm going to pay my normal salary to the employees for the 6-day work week. So I'm going to credit cash for $7,080 because I know that's how much I pay every week. I now don't owe them the salary anymore for these 4 days because now on August 4th I've paid them. So my salaries payable is reduced to 0. So I'm going to debit the salaries payable for $47.80, and then I'm going to record the expense of the 2 days that they've worked for us in the next fiscal year starting on August 1st. So we're going to have salaries expense of the total amount, or $11.80 per day, times 2. So again, my salaries payable and salaries expense equal our 7,080. My math is off. That's because I didn't put the right number there. So it's 4270, 4720, and 2360 gives me the 7,080. All right, so I record my payment on August 4th, but I've already recognized 4 days of that expense in the previous year, and I set up the liability saying I owed that, but I no longer owe it. I've now paid it, so I'm going to reduce my payable by the 4 days and then record the 2 days they've worked in the current year for salaries expense.